Hey, Josh Centers here. It's been a while since I've been able to make a video. I got a newborn, I got a new book on the way. I'm working on trying to get that finished up. Got a lot going on. Haven't had much time to record videos lately, but I had to take a minute. I've had a lot of beefs pop up on Twitter, and Twitter's a terrible place for conversation. It's a terrible place to address things. So I just had to take a minute to address one of them that's popped up. People are taking issue with something I've been saying a lot lately, and I stand by it 100%. Apple has hit a wall. They sold iPhones, iPads, MacBooks, you name it, to as many people as they can. They can't sell more of those unless they come up with a new product, which I think they're having trouble creating new products, or if they boost the price on those to increase revenue. Because that's the two ways Apple shows growth: by unit sales, the number of products they sell, or by revenue, which is how much money they take in for selling this. Not profit, revenue. That's the thing people measure Apple by. Now, of course, in quarter one 2019, Apple is going to stop reporting those unit sales. So it's in Apple's best interest to raise prices and get people to pay more for those products to increase revenue. Now, a lot of people have taken issue with this for one reason or the other. I think because they get the idea that I'm saying that Apple is ripping people off somehow. I'm not saying that. All I'm saying is Apple is charging more for the products they sell, and they're charging as much as they can get away with. Or I should say, as much as the market will bear. Now, some people have countered this by saying, well, look at the margins. The margins haven't changed. Actually, if anything, the margins have gone down. So let's take a look at that. Yeah, if you look at these margins here, and this is from macrotrends.net, and this is just the best looking chart. Bloomberg, other sites have similar charts here. I didn't see any reason to chart this out myself, and there's plenty of perfectly good charts out there. But if you look over the past 5 years from 2013, you see the gross margins actually peaked around 2015, 2016, 40%, and these days it's closer to 38%. But this has been pretty steady. So the margins are not going up. But guess what? It doesn't matter. It doesn't matter. Profit margins matter to working Joes, to companies that still need money, have to actually worry about making money. Apple has $250 billion in the bank. Apple's problems aren't money, aren't cash on hand. Profit margin, how much profit they're making. I mean, don't get me wrong, it's still important, but it's not important in the same way that is, to you or me or to, most companies out there. What Apple has to show investors, what investors are worried about with Apple, everyone knows Apple knows how to make money. Apple's been making money since the 70s. Apple's never really had a problem with that. Even when they weren't doing so hot, they still managed to bring in profit. The problem is people don't want to buy their products. And the thing investors want to know is, do people still want to buy Apple products? And can Apple keep selling those products and keep getting interest in them? How much do people love Apple is really the question Apple has to answer every quarter. So Apple is in a kind of tough spot. It's an enviable position. It's a good problem to have. They're in the position of everyone who wants an Apple has an Apple. As my friend Jeff puts it, they're appling as much as they can possibly apple. There's no more Apple to be had. And it's why they've been pushing so hard to break through in China and India, but they're hitting walls in those places, sometimes literally. There's just so many people they can sell iPhones, iPads, MacBooks, Beats headphones, etc. too. I think long term, they're going to try to sell a car. They're going to try to sell some sort of VR, AR sort of thing. They've got to get some new products going. But I think they're stretched thin as is because Apple can only acquire so much talent, and that gets spread thin between Mac OS, iOS, Watch OS, tvOS. I write about a lot of these for a living. It's a tough thing, and they don't always have the resources to do everything they'd like to do as it stands. Much less if they're trying to support a car platform or an AR platform or all this other stuff. So their best bet, if they want to keep showing investors double-digit growth, they're selling all the units they can. That's topped out. I've covered that elsewhere. I'm not going to cover it again here. The best thing they can do is to keep increasing revenue. So what can Apple journalists, like myself, if you consider me a journalist, what can we do to keep Apple honest in this area? Well, we can't report unit sales anymore. Apple's not going to release those. And a lot of us gave Amazon a really hard time because Amazon's never given those unit sales. They'll say, oh, we sold twice as many Fire Sticks as we did last year and twice as many as the year before that, but we never actually know how many they sell. I'm not even sure if they break that out by revenue. I don't look at Amazon's data sheets. I couldn't care less, frankly. But it's something that, you know, we hold Amazon to task over. We should hold Apple to task over as well. So Apple is being less transparent now. I think that's a bad thing. Some of my investor friends will disagree. That's fine. As a journalist, I think it's a bad thing. I think it's a lack of transparency on Apple's part. What I do want to start trying to do is I want to try to start comparing, because every quarter when I do the article for Tidbits, I have a chart of their revenue growth over the past few years in the same quarter, because you always want to compare quarter to quarter, and usually that's flat or tips up a little bit. You know, I've always thought that was honestly the best assessment of how Apple is actually doing, is how much revenue they bring in, how much, you know, actual cash they bring in. You know, part of me kind of wishes I had done unit sales now, but then again, part of me is like, oh, I'm glad I didn't do unit sales, because now I'd have to be redoing all my chart data. So, you know, but to keep that honest, I do want to try to focus more on the margins. I'm curious what kind of margins they're getting. Now, Apple, I'm not quite sure when they report these actual margins, because in the data I can find for the quarters, they say this is the margin we predict for the next quarter. But somehow Bloomberg and these other sites are getting this data. They're able to chart it out. So I do want to keep an eye on that. If the margins start dipping a lot, we're going to know Apple's actually cutting into their own money stream to sell more products. That'll be a bad sign for Apple. And if the margin actually increases, then we'll know that demand is very high and Apple's capitalizing on that. But that's just something I wanted to clarify real quick. Is, you know, yes, I understand Apple's margins haven't changed much. Actually, if anything, over the past couple of years, they've declined slightly. But that's beside the point. Apple is trying to show steady, constant growth. They have to prove to investors that people still are crazy about Apple products. And Apple, if they don't show that double-digit growth in a quarter, investors just tank the stock. And that's something Tim Cook doesn't want to have happen. Tim Cook doesn't care about the money. He's got $250 billion to play with. Apple doesn't even do anything with it. I don't even think Apple has enough. I don't think there's anything Apple could buy for the money. Look, I'll just put it to you this way. Apple has a lot of things that hold them back. The one thing that does not hold them back is how much money they have in the bank. And that's a pretty good problem to have.